Rob Subbaraman joins us here in the studios. Nice to see you.
Good morning,
I should tell our viewers that right now we're standing, I guess, in the glow of the Shanghai downtown scene. I think that's Fuxing Lu. Is that right?
That's right.
Looks about right. Okay, well, let's talk about Q4 GDP numbers because 11%, slightly above economist consensus for our survey. But is China overheating? Are we in a bubble situation?
I think I wouldn't say we're in a bubble situation yet, but we're at the point where it could be starting to overheat. Don't forget the Q4 number is for the whole of Q4.
Yeah.
We'll be getting a lot of December data as well, and industrial production is probably going to be growing at 21.5% or perhaps even higher. Retail sales, 16%. So these are very strong numbers. And then you have the reported very strong new bank lending this month. So for first quarter this year, we're even higher. We're at 12%. So we think it's very much justified to start to rein in the economy a little bit, put the foot on the brakes a little bit to avoid overheating in the second half of this year.
Yeah, what about reports of a possible interest rate hike this Friday? That seems unlikely to you?
It can't rule it out at this point. We think the Chinese economy is booming, and we think being preemptive here is a prudent policy. Our forecast is it could happen as early as February. February is our kind of forecast. But we do expect a lot more tightening measures. We have rate hikes in February, and then another interest rate hike in Q2, and then a third one in Q3. We think the reserve requirement ratio will go up another 50 basis points in Q2. We think the renminbi will start appreciating gradually again in March.
Yeah, in March sometime. What is the expectations for the renminbi this year? I mean, we're looking at, what, 2-3% appreciation, if that? I mean, does that really help let some of the steam out of the Chinese economy?
I think we're expecting about 5% appreciation. I think that by itself does not do much.
Yeah.
But it's really a combination of all these measures that I talked about, probably also more prudential administrative measures aimed at the property market and banks. Our view is all these things will help cool down the economy a little bit. And for the whole year, we have 10.5% growth, and next year close to 10. We don't think this is the start, though, of very strong credit controls, draconian credit controls. We don't think that is going to happen this year.
But the Chinese government and Chinese researchers themselves are saying 10% growth a little excessive. I mean, don't you think? You know, they're thinking that things could ramp up so much that we could see this bubble bursting. You're not calling it a bubble, but other people are.
I mean, we think 10% is close to China's potential.
Right.
So that's kind of the number we would be comfortable with. If we start to get 11, 12, 13, that's when we will get concerned about more of a boom-bust cycle. Yeah,
let's look at the downside, because you said if this GDP number comes in actually below 9%, which is highly unlikely, right? Considering double-digit growth for industrial production, retail sales, you name it. But if it does come in below 9%, you said this is when the questions really arise. Is China starting to cool, and is the recovery for real?
I don't think the markets would respond too negatively with a low number, partly because it's a rearview mirror statistic. It's Q4, and we know that the lending data in particular has been very strong. So our assessment is it wouldn't be too much of a negative reaction. I think the bigger risk, if it's 12, if it's a very strong number, much stronger than expected, people are going to be worried about, you know, even much tighter policies.
All right. Well, Rob, nice seeing you this morning. We're waiting for those numbers out in just about an hour from now with Q4 China GDP. Thank you, Rob Subbaraman of Nomura International Hong Kong.